So we're looking at the environment of alternative investments. So what we'll be looking at, we will look at the following: the market participants, and like that. And specifically, we will look at the buy side participants. So we look at buy side participants. Then we will move ahead and look at the sell side participants. Like that. And then we will be able to conclude by looking at the outside service providers. Outside service providers. Like that. So I'll give a brief introduction about what we will be able to cover under the market participants, the environment of alternative investments. Alternative investments, as we had mentioned in our previous chapter, include alternative assets such as real assets, private equity, structured products, commodities, and finally we will be looking at looks like real assets, private equities, structured products, commodities, and hedge funds. There. That is what we had looked at under chapter 1. What we will be able to look at is that under these instruments, they have the financial markets that exist. The financial markets that govern alternative investments can be in the form of primary market, secondary market, and third, what we call the third and fourth markets. There. I will be able to explain them in detail in our next topic, rather not in our next topic or in our next lesson. So once we look at these, we need to understand the participants. Which participants govern the real asset subsegment of alternative investments? We will be able to look at that. Private equity, structured products, commodities, and hedge funds have got unique market participants there. Now we are talking about the buy side participants, the sell side participants, outside service provider. But we will be able to provide on a general scale the explanation of the participants right there. So what we will look at, we will look at the following. So we have we look at market participants. There, and we start off by looking at the buy side participants. Number one, buy side participants. There. Now, under the buy side participants, we can say the following: these buy large quantities of securities in okay, fine, there's no need to explain in large scale, but we're saying large quantity of securities for investors. Now investors include individual and institutional investors like that. Now specifically, we will look at plan sponsors there, and we can say the following: that they establish like that a healthcare or a retirement plan plan that has special legal, they are special legal, and we can say legal and tax status, there. So individuals want to fund, plan sponsors are institutions that fund the healthcare or a retirement plan which has got a legal and tax status there that is unique there. Now we move on and look at foundations. B, foundations. There. A good example of a foundation is the Jomo Kenyatta Foundation, and we can say the following, that they are not for-profit organizations that perform certain tasks. We can say certain tasks include they are able to donate funds and as well as provide support to other entities that donate funds and we can say support other organizations support other organizations. A good example, you can say Jomo Kenyatta Foundation. Jomo Kenyatta Foundation. Now, what it does is that they are a not-for-profit making organization that donates funds, that usually donates funds for research and also donates books to the less fortunate and like that. So that is what we're saying is a foundation. We can move on and look at C, an endowment. There. An endowment, we can say, is also a not-for-profit making organization, not-for-profit making organization, like that. Not-for-profit making organization that focuses, that is formed for a specific purpose, that is formed to support an ongoing research, and then we can say for a and support and not support to other organizations, and also does what we can say it's for a charitable cause also. So we're saying it's a not-for-profit making organization that is formed to support an ongoing research activity like that. That is what you're saying is an endowment fund. They're almost similar. Foundations and endowments are almost similar. The only difference is that this one is for a not-for-profit making organization that donates funds for the support of a particular for a particular cause. There, in an endowment, you can say it's used to support specific programs. For example, the Jomo Kenyatta JKUAT, Jomo Kenyatta University of Agriculture and Technology, that has got the Bachelor of Science Financial Engineering, which may have an endowment that supports that qualification there, like that. So that's why we're saying it is different. This one is for providing books and also investment research. This one is for maintaining specific programs within universities there. So that is about an endowment. Let's look at a home office. D, home office and private wealth. Now here we can say that they manage high net worth funds. They manage high net worth funds high net worth funds, both for institutions and for individuals. This is specific for high net worth clients, not a fund that is formed for any other individual, but only for high net worth clients. So we can move on to E right there. And we have separately managed accounts, separately managed accounts. And we can say these are accounts offered. These are accounts offered by a brokerage firm managed by an individual firm, by an individual firm, like that. These are accounts offered by brokerage firm managed by an individual firm. So you're saying we have a firm that exists like this. This is a brokerage firm, and then they have an account over here, or they have separate accounts right over here. Maybe this is a fixed income fund, and this is alternative investments, and this is equities, like that. So these ones are managed by separate firms like that. So we can say that these ones, of course, these are separately managed accounts. Yes, we have them in alternative investments, and this is a unique form of fund management in Kenya. This is a very unique form. It is not readily applied here in Kenya as yet, but it is expected that the same principle of having multiple accounts with the same bank is applied in that concept there, or in that pretext there. So F, we can see we've done buy-side participants, rather plan sponsor, foundations, endowments, home office, and separately managed account. I don't think of any other buy-side participants. We can be able to move on and look at the sell-side participants there. So let's look at the sell-side participants. So that was number one right there. And here we have sell-side participants. Sell-side participants. Yeah. Now, as we had said over here, these are individuals who buy large quantities. Now, in this other side, the sell side participants, what we are saying is that these are individuals or firms that provide investment research. So, in the buy side, your intent is to acquire something like this. Sell side participants, your intent is to try and sell or provide information to either buy side clients or probably maybe to outside service providers there. So we can say that they act as agents. They act as agents like that for investors, pardon me, for investors. And then we can continue to say when they try to sell, to sell securities or investment research there. So we are still looking at market participants. Let me not rub that, and I'll be able to first of all highlight the first sell side participant. The first sell side participant that we will be looking at includes the account brokers there, account brokerage firms there. So the first sell side participant that we are going to look at is the large dealer banks. So A, we can say large dealer banks there, and we can say the following, that these large dealer banks underwrite in trades, or they underwrite issues and execute, we can say execute trades on behalf of clients. There. That is the first sell side participant. Now, the next sell side participant that we are going to look at right over here is the brokers, B, retail brokers. Now, retail brokers, we can say the following, that they actually perform some very unique roles, including execution of some trades, and amongst others, they also do research and also perform some unique services, including the front office role, the middle office role, and the back office role. So we can say over here that they provide investment research. And what else? We can say execute trades on behalf of clients, execute trades on behalf of clients, perform certain roles, including front office, middle office, and back office roles there. So the front office role includes the client-facing kind of activities, including providing basic advice, financial advice, and like that. And then the middle office roles include now the execution of trades. The back office roles include the IT side there, where the IT individuals or experts perform the roles of trying to come up with algorithms that are going to enhance the returns of the portfolio, try to develop models that are going to try and identify the optimal fund allocation there. So those are the two major sell-side participants that we have in the alternative investment sector, the large dealer banks, and also the retail brokers. Now, we can move on and look at the outside service providers. They do not fall within the buy-side role and the sell-side role, and so their services are very important or crucial towards the alternative investments sector there. So we say that the outside, that is, I think it was C or number 3, there, outside service providers. Outside service providers. Now, the first outside service provider is, we can say, prime brokers. We can say that they allow, investment managers to perform trades in multiple instruments. Like that. That is what we're saying prime brokers are as part of outside service providers. B, we are saying we have accountants and advocates, and we can say that accountants perform the role of ensuring that performance reporting and reporting of the fund's health is done in accordance to the international financial reporting standards, like that. That is the primary role for accountants. Now we are saying for advocates perform the role of identifying or formulating the optimal fund structure. The optimal fund structure in accordance to the objectives and constraints. As to objectives and constraints of their clients. So that's the role of, or those are the roles for accountants and advocates there. We also have the hedge fund infrastructure, which includes platforms, softwares, and that is also an outside service provider function. So hedge fund infrastructure, this is in particular to hedge funds. So we can say C, hedge fund infrastructure. Hedge fund infrastructure, we are saying include platforms, trading platforms that ensure execution of trades is performed in accordance to the laid down rules. That is about platforms. We're also talking about the software there, which includes the systems used and algorithms there. So we also have data providers or data platforms there. We can say data platforms, or where will you be able to access a huge volume of data. We can say that the huge volume of data can be gotten from Bloomberg, but we need to also see if Bloomberg is compatible with the systems that the company is actually trying to procure. That is a very key. So that analysis can actually be done in a very simple way. Now that is it for hedge fund infrastructure. Now other individuals who participate include D, we can say consultants. Consultants are individuals who come about to try and see if the model is actually working as performed there. They also provide additional service of advising the firms on whether they are actually achieving the objectives and against the constraints of the fund.